Hey traders, this is Ron at Market Tamer. Happy Fun Day Monday. Hope you guys had a great day. As always, everything in this presentation is for educational purposes only. Kick off here with the SPY. Finished down a couple pennies. Right now it's up a little bit after hours. We're still above the red line, which is the 20-day EMA that continues to be our line on the sand to start gauging if we got problems here in bull land. If we take a look at the diamonds, the DIA, they finished just barely in the green today, up a little bit after hours again, holding their red line at the 20-day EMA. Take a look at the Qs, the NASDAQ 100, basically right on its 20-day EMA. It just finished a couple pennies above it. It too was up just a teeny bit in after hours. And I'm doing this video right around 5:38 p.m. Eastern. So, hour and a half after the market closed, just getting a little bit of a push up here. And then the Russell 2000, the small caps ETF, still below its 8-day EMA in blue. Target is the 20-day EMA in red. Now let's move on to face plant. So here's Facebook. I had a question on this one. It's been in a really nice bullish trend since December. It's well off its highs though, up above 200. Now we zoom back in. On Friday, we got above the 50-day, right? And there's this high wave doji showing indecision, showing that the bulls had a chance. If they could close above these highs right around 191, it was a clear shot up to 205. Personally, for me, as a looking at like a swing trade, a couple days, couple weeks type of trade, that's not a bad reward to risk ratio. Because if we start breaking out, I could then trail the red line, the 20-day EMA, up as an end of day trailing stop. That wasn't the case. Finished mid-range and back below the closing high from 9.5 right after Labor Day. Now here we sit today losing, over 1%. For me, if I was going to try to trade Facebook, it's really sort of boxing itself at this stage. You have this 191 or so resistance and then support somewhere down here about 180, but then there's another little dip low here around 177. Okay, with that said, frankly, it needs to break the 200-day because with this being, what is that low? 178 and we're at 174, that's only $4 difference. And over the next couple days, it's going to inch its way up towards 178 anyway. That's why it needs to not just break this low now, it also got to take out the 200-day. And if that happens, then I think we could see a fall maybe down in here to the 161-ish area, which were the lows back from June. All right, how about Beyond Meat? This one here still is range bound too. We had a little bit of a break to the upside here, and right now 140, I would still watch that to the downside. After today's 4% rollover, the target's going to be the intraday low from 6.7, that's right around 121. So if it breaks 140 on a closing basis, 121, that's about a 20-point drop. Then the next drop's another 20-point air pocket, all the way down to 100. Keep an eye on big lots here. I continue to watch some of these retailers, but big lots perked up in a big way, unintended. It just lacked mega volume. It really would have been nice to see a big tall oak tree like something over here, catapulting it higher. But we did get just above average. Now that black line inside my TradeStation chart here, that black line is the 50-day simple moving average for volume. We got above that today, 1.8 million shares. The last closing high is 9.9. What is that? 24.7. Wait, 24.44. 19 cents away. We get above there, and then a little bit of ledge here at 26. Then maybe back up here. It's not the greatest resistance levels, so if this thing which has now put in a higher low, almost like a mini tweezer bottom there, but doesn't quite qualify, but there were probes lower, and the bulls came back and closed it higher right in there on one of those days, 917, 918. So 20-day EMA has potential end of day trailing stop, upside target. If we can just get about 20 cents higher, I would just throw it right out there to the 200-day moving average. And gold, silver, also had a question on this. Remember how they were starting to roll over? And I said, watch the 50-day on gold. We started to have a fracture here. We couldn't get above it, but we never got below the 50-day. To me, that would have been a trigger to consider a bearish, aka short trade idea. What happened? It just did nothing, and now it's popping up. Right back to the previous highs now would be the target. If you look at the gold miners, so gold was up 0.41%. The miners were up, put a 1 in front of that, 1.43%. Now, miners are a different story. They did fracture the 50-day back on 9.9. They then gapped up, hit the 20-day. They broke that. Then they closed on 9.13. What was that price? 26.64. We almost took out the closing price here. We didn't quite do it. Then we rallied, hit the 50-day, hit the 50-day. There was no rollover again. Now this one popped higher. So GDX was weaker We broke the 50-day, which would have been a bearish sell signal, a technical sell signal, but we never broke below this low. If you're always looking for those extra confirmations, that one-off low there, but I got to tell you, this looked mighty good. This breakdown, rally up, hit the 20-day, get rejected, close right back down. It was looking mighty good for a charge down to the 200-day. Just didn't happen, and now it's pushing higher. If we take a look at SLV, the silver ETF, it broke the 20-day. Remember watching the 50-day, that's the sign that maybe this rally is dead. Today, gap higher, right back up to the highs. Target, here are the silver miners. They were up almost 3%. They did break the 50-day back on 9/13. The next day, we closed higher, sideways, sideways. Now we're exploding upward. For SIL, if I zoom out here a little bit further, 32 bucks or so is going to be the target, almost 10% higher, and then back up towards 34. So miners are making a turn around. There was also a question on quad witching, potentially how to trade it. All I can tell you is from a paper trading perspective, because I'm not a licensed financial advisor, when it gets to that quad witching or anything else that you want to do with pinning and seeing what the market might do, it's a great question. And I would say practice, practice, practice in a paper trading account. Go through periods of quad witching or triple witching where there is no volatility, basically a flat inside day, which means time decay is just going to evaporate, which is great if you're selling options. And then if it's a low volatility environment and you get a big push on a Friday and it goes one way or the other, you can get run over like a freight train. It can get very ugly very, very quickly. So with that said, again, practice on paper. In theory, some of this stuff makes sense. It's like, oh, if there's not going to be a lot of movement, sell spreads out of the money. The week of expiration, typically the Tuesday of the week of expiration is when time decay really starts to kick in, which is what makes weekly options so powerful. But when you get into a monthly option, the monthly becomes the weekly, and that's where all the liquidity is. So just again, practice on paper. With that, wish you guys a fantastic rest of the day, and I'll be back with you tomorrow in the next video. Take good care.